Start with the proceedings. We have the first panel discussion for the day on the topic of financial fraud and protection. And the discussion would be moderated by Mr. Pijush, the Director of Training and Development for Crowe Academy. And the panelists include Mr. Shawki Ahwash, the Anti-Financial Crime Professional and MLRO at the North Africa Commercial Bank, Mr. Ibrahim Yeku, the Legal Counsel for Amaiden and Nigeria Limited, Mr. Hijaz, the Chief Audit and GRC Officer for Bindawood, Mr. Ajay Thomas, the Chief Financial Officer for Kuwait International Bank. To introduce the moderator very quickly, he's an ex-banker with subject matter expertise in treasury, risk, compliance, and fraud management. He has been with the State Bank of India for about 27 years, and he has been actively working on assignments in Singapore and Nairobi. He's a certified AML specialist and an adjunct faculty at the SPJ University in Dubai. So, Mr. Pijush, I leave the stage for you, and I will request the panelists to introduce themselves before we go forward with the session. Thank you so much.
Thank you. So, Mr. Shawki, will you introduce yourself, please?
Yeah. Good morning, gentlemen, and good morning or good afternoon or good evening. Assalamu alaikum for all those attending this webinar. So I'm Shawki Ahwash, based out of Beirut as MLRO, head of AML, CFT and Sanction Division at the local bank, North Africa Commercial Bank. I am a certified anti-money laundering specialist, certified global sanctions specialist. Also, I've got the combating financial crime certificate from CISI London, whereby I teach their course across the MENA, whether in person or online. I have been lucky to participate in many consultancy trainings from East Africa to the GCC to Turkey. And I'm also active on item writing and question writing for Tier 1 organization, which deliver exam-based AML CFT certification. Also, I have experience in various areas within the banking sector, like trade finance, investigation, cross-border payments, before joining the AML role. So that's it.
Thank you, Mr. Shawki. Mr. Ibrahim, would you like to introduce yourself?
Thank you very much. I think this is Money. I'm speaking from Nigeria, and it's Money in Nigeria. Yes, but my background as a lawyer, I have over 15 years practice in corporate compliance and advisory. I'm a certified anti-money laundering specialist and a member of the Accounts Today Europe Editorial Advisory Board. I'm a certified corporate compliance and ethics professional, and I sit on the advisory board of the Compliance Today magazine. I'm the country rep for the International Due Diligence Organization, where we provide support and training for due diligence professionals across West Africa. I do background checks and the pioneer and the proprietor of knowyourcustomer.ng, which is a KYC platform here in Nigeria. Generally, over the years, I've published over about 13 articles on corporate compliance and AML, published on several articles and on several magazines across the world. Positioned to improve the AML system in Africa and to strengthen the AML regime and to make the system less vulnerable to pre-details of money laundering, and which is the focus and one of the issues I believe we'll have to be discussing in the course of this conference. Thank you very much.
Thank you, Mr. Ibrahim. Mr. Basem, over to you.
Thank you, Pijush. Appreciate the conference, and thank you for everyone participated in this great event. Good morning, good evening, good afternoon for everyone. Assalamu alaikum. My name is Basem Hijaz. I am the Chief Audit and GRC Officer. GRC, as you know, stands for Governance, Risk, and Compliance. I have wide experience in the GCC countries. I worked in many countries in GCC, and my role was responsible for audit compliance mainly. I am participating in many audit committees and have good experience how to deal and represent the companies in front of the authorities. Examples of the authorities: the GAC, which is General Authority of Competition, Capital Market Authority, Ministry of Commerce, all these related authorities. I am representing the companies in front of these authorities. I am certified public accountant and certified fraud examiner, and inshallah we will be able to add value to this conference and event. Thank you.
Thank you, Mr. Basem. Mr. Ajay Thomas, over to you.
Thank you, Mr. Pijush. Good morning, good afternoon. Assalamu alaikum to everyone. Happy to join this conference. Very relevant in this era of fintech and fast-paced technology changes. I am the Chief Financial Officer of Kuwait International Bank, and apologies for any disruption in voice because I'm traveling. I'm out of Kuwait right now. I'm a chartered accountant from India. I used to be with Deloitte and PricewaterhouseCoopers in assurance and advisory for about 10 years. I'm also CISA and CDPSC certified. Prior to joining PwC, I completed my master's. I don't directly deal in AML at Kuwait International Bank. However, the central bank reporting is under me, so we liaise closely with AML reporting and any fraud unit to report issues and have the regular reporting to Central Bank of Kuwait. In this era of fast-paced technology, as you know, AML faces a lot of challenges, and I think it's one of the apt conference themes. Happy to be with this very elite panelist, and happy to add value as I can to this conference. Thank you again, Pijush.
Thank you. Thanks a lot to all of you. And now we go to our panel discussion. And the first question is, what are the new age financial frauds you have witnessed in about the last 1 year? The new age financial frauds that you have witnessed in the last 1 year. And we will start with Mr. Shawki, and then everyone will take 2 minutes to, tell us.
Yes. Actually, the fraud topic is really pertinent at this day and age, given this interconnectedness and, as my colleague mentioned, the fast-paced technology where criminals are always being innovative and adaptive to use financial sector to do their fraudulent or illicit activities. Just let me first pave the way for a citation from Warren Buffett regarding fraud, who once said, when you hire someone, you look for skills, energy, and integrity. And if they don't have the last one, don't even bother and look for the first two. So it's really integrity, which is the baseline to fight fraud. Now, back to your question about the new modalities or the emerging threats driven by fraud. I would say that the COVID era has learned us or taught us much about how criminals use this epidemic to defraud institutions, because everyone was locked down using the online platform. We had the elderly fraud, we had the fraud regarding protective equipment. So even when it comes to health, you see criminals exploiting these loopholes within health system to gain money. Also on the crypto front, we have seen what we call, I'm not a crypto expert, but we read a lot, we have to be exposed, watching what's going on around us. This big butchering where it's like a Ponzi scheme, but on the crypto side, where an investment is built, then everyone will lose the money. Also pulling the rug, which is also luring investors to invest their money in this crypto project, which end to be a pure scheme and fraudulent, making people pay money in a very useless way. Back to my area of expertise into AML, CFT, and sanctions, we have seen a lot of fraud regarding bill of lading and user certificate, which is used for trade finance activity. Also, the influx of sanctions against Russia lately and Chinese technology corporations made these companies evade sanctions by creating fraudulent front companies that will allow them to procure vital technologies of US origin. Because there is some restriction on export privileges for some companies, so instead of using these restricted or listed companies, they went to create fake companies that will procure these items under their names in a plea to avoid sanctions. So basically, this is the area now where frauds seems to be flourishing with regards to non-compliance with international sanctions.
Okay, thank you, Mr. Shawki. And so you mentioned about people trying to evade sanctions through use of front companies. Thank you, Mr. Ibrahim Yeku.
Yeah, thank you very much. I think to really speak on the issue Mr. Shawki raised, particularly on the issue of sanction, there are challenges around the AML, the global AML regime, and you see the deliberate tagging or bad naming of certain countries, and by extension, companies operating in these companies as a result of sanction imposed by so-called righteous or countries in good standing. For me, I think there's a distortion, right, in the sanction regime as to whether sanction imposed on certain countries are legitimate enough to be obeyed by corporations of other countries. And that's where the AML global sanction regime begin to suffer some setback. We want to know what is the legal justification or what is the moral justification for imposing sanction on China because you have a diplomatic row or between China and the US or other parts of the world. And I mean, so for me, the sanction regime is not really clear, and how it should be obeyed by countries. By companies operating in these sanctioned countries is a bit, for me, questionable. But that is that on sanction. With respect to the emerging trend of fraud, we've seen a lot of things, and of recent concern for me is criminal technology entrepreneurs who invest so much in technology, build application of quasi-social relevance as a means for having access to personal information of individuals and using that information, to defraud members of the public. And because of the emerging trend and wide-range adoption of technology in solving social problems, people become more vulnerable to this act of these criminal technology entrepreneurs. Now, by design, the intention of developing some of these technologies are not with the intent of solving the social problem, but rather with the intent to have access to information that can be manipulated as a means of defrauding. So we've seen a couple of that, and one of the famous things you see around these days is whenever a group seems marginalized and they don't even have what it takes to be represented on the global space through the internet, you have individuals coming up to develop an application or to set up a GoFundMe account just, in the bid to support the cause of the so-called marginalized group, and they get money from unsuspecting members of the public, and the money doesn't get into the right to the people that supposedly they raise the money from. We've seen that repeatedly. Then another critically, and learning from COVID as well, is the issue of information distortion. And you see that information distortion arising from people not being aware of certain state of affairs or what is happening in other parts of the world. And that information advantage that these criminals have is being used to defraud people in other parts of the world. Regardless, they distort the information and misrepresent facts of events. Now, unsuspecting members of the public who don't do proper due diligence and don't fact check, they rely on distorted information, follow the wrong lead, and they are defrauded. You will see that often in this period. Also, you have the issue around RegTech, regulatory compliance technology. I mean, in a bid for some corporations and some companies to comply and ensure appropriate compliance with laws, they've been scammed in recent time, subscribing to tools that are not verifiable, that are not reliable, exposing the operations of these companies, and eventually they get fined. So you have subscription to applications that are not really meeting your needs, all in the quest to optimize or maximize your operations for operational efficiency. You pay a sum of money, but then you get nothing in return for that. Then lastly, I want to talk on the financial sector particularly. And I think it's one of the issues we'll discuss in the course of this conference is the adoption of technology of mobile app and the level of fraud around mobile app applications. And several reports out there on the number of persons who have been defrauded through the use of mobile app and adoption of this technology by banks. So the banks need to do more of fraud impact assessment, carry out an impact assessment to determine the extent of the vulnerability of whatever technology they are adopting and how these technologies can be exploited by criminals as a means of defrauding unsuspecting members of the public. I think that's my take on it.
Okay. Thank you, Mr. Ibrahim. I'll just summarize what you said. You said non-justification of sanctions. You talked about the social security frauds, COVID-related frauds, and you mentioned a very important point that some RegTech technologies are fraudulent and that can really impose problems onto users of such technology. And of course, you mentioned about mobile frauds. I hope I've summarized what you said.
Yeah, very well.
Okay, thank you, Mr. Ibrahim. And Mr. Basem, what new age financial frauds you have witnessed in the last 1 year?
Okay, thank you. I will try to be more specific and summarize the answer for the question. So I saw many examples during the previous years, and all of us witnessed a huge increase in the number of financial crimes, as you can see. And from the statistics itself, it says there is exponential increase in the number of financial frauds and the crimes. So you can witness many examples and cases. One of the interesting cases that I saw, it happened in UK. It was an interesting case for a company called Santander, if you hear about it. This company faced fine from the regulators amounting £108 million. So you can imagine for one case against one company, the fine was from the regulators for £100+ million for such a failure in AML. In summary, open investigation by the authority during the previous years, the UK division of one of the banks had failed to maintain its anti-money laundering system adequately. This reflected and affected how the bank deal with the customers. More than 500,000 plus customers' information were leaked and mismanaged. From 2012 to 2017, the bank system couldn't properly verify the information that customers provided regarding their businesses. Since Standard, which is the company, didn't dispute the regulator's findings, the bank qualified for 30% discount on the fine. One of the regulators mentioned that the management of this company and the poor management of their anti-money laundering systems and their inadequate attempts to address the problems created prolonged and severe risk of money laundering and financial crime. One of the other examples that we witnessed here locally, one of the authorities here called General Authority of Competition, they penalized before a few weeks, by the way, it is very recent, more than 15 company, and the fine was more than 140 million Saudi riyal. So you can see how much it is impacting the companies. Other thing which is very interesting regarding the artificial intelligence, now it became to be utilized by many companies which are trying to avoid the anti-money laundering sanctions or regulations. Many companies started to implement systems for avoiding the voice recognition. As you know, some banks are recognizing the clients through voice, and the artificial intelligence became now able to make the same sound that you have as a client. So the bank will not be able to catch such fraud by artificial intelligence, and it will be very strong to practice as you are legitimate customer and the client. We heard about the capabilities of the AI and how it can bypass the limitations. One interesting example, if you heard about it, that one of the AI tools, once it reached to the identifying the picture which contains specific maybe bird or maybe tree whatsoever, so the AI took this picture, send to external email, and asking this person to please help me to identify which boxes contain the tree or the bird or whatsoever, and saying that I am blinded person, please help me to do such thing. So the person responded, so the AI took this answer and being able to bypass the limitation and the challenges that such systems has. So we can see how the global is going with new trends, and AI brought new challenges and new complexities for such industry. Thank you, Pijush.
Thank you, Basam. I think you made some very important point and a scary point. And you said that people are actually, using AI or using the vulnerabilities of AI, like deceptive voice recognition frauds. That's a real scary thing, Basam. Thank you for highlighting that. Mr. Ajay, would you like to talk about the new age financial frauds that you have witnessed?
It's interesting. There is an annual publication by KPMG called the Annual Fraud Barometer. In UK, the Annual Fraud Barometer reported that last year, the fraud cases in terms of number increased by almost 151%. And the litigation regarding to frauds reaching UK courts were in excess of £1 billion. If we go to US, CNBC reported that US consumers lost more than $6 billion in 2021. We can assume that this will totally have increased over 2022 and currently in 2023. We had a mention on COVID and related improvements in fintech. This is one big challenge that we face in banks. Now that customers are used to the ease of use in banking applications, they prefer banking applications which offer them one-touch solutions. They don't want to go to layers of security authentication and all these cumbersome processes to make sure that they are the real customer. It's more about ease of use now. So fintech banking related applications have exponentially increased in terms of ease of use, and these also bring along with them challenges for banking security professionals. Another example that we all heard about, even where central banks were cheated, is the SWIFT fraud in some of the countries. Fraudsters were able to bypass SWIFT messages. Some of them were luckily caught just because of spelling mistakes and stuff. So even central banks in recent times have fallen prey to sophisticated frauds like SWIFT frauds. Banks recently have improved in terms of fintech offering. We see frauds related to UPI related interfaces, where fraudsters attack our UPIs and tame our UPIs to make sure that small transactions are routed to their portals. Another important challenge that we face in banks is card-related frauds. There are a lot of card-related frauds that we get reported periodically, both in terms of credit cards and debit cards, especially when there are use of international credit cards by travelers. And again, we see phishing attacks in almost all companies, especially in banks, trying to take advantage of social behaviors of executives. One example is that every time I go on leave, some of my team leaders would immediately receive an email from anonymous threat posters that I am out of country and I am stranded somewhere, and please need my contact to send some money. So, like one of our panelists explained, education and being careful and being vigilant is the only way out. These attacks will only go up. Fraud cases would only go up given the present challenges related to technology and ease of use that all banks face. We need to be careful. We need to educate our customers. Thank you.
Oh, thank you, Mr. Ajay Thomas. So you mentioned about, business email compromise, card-related frauds, UPI-related frauds. Thank you. So the next question, the next round of questions would be, how do you connect the dots? How do you handle compliance, reputational, and operational risk? How do you connect the dots together? Mr. Shawki?
Yes, actually, when you have these kind of risk, they seem to be interrelated and overlap within the financial crime space. For example, when you have a compliance failure, this may lead you to detect operational failures and other set of risks. Just let me start by, because Mr. Thomas revived my memory regarding the attack or the cyber heist that happened, I guess, at Central Bank of Bangladesh, where there was a really overtake of the SWIFT network at the central bank, which led to the embezzlement of lots of money from the correspondent bank. And here comes the factors or the risk of internal versus external fraud, because usually you have insiders from within the company helping hackers who compromise the system. Another kind of risk here that could be attributed to operational as well as compliance is the wire stripping fraud, which is merely tampering or claying or wiping out essential data from SWIFT messages to bypass or make a U-turn on filtering screening systems. For example, you may drop a word related to Sudan, to Iran, to North Korea to let this payment trick the filtering system. And this is basically could be attributed to internal fraud manifested in wire stripping or tampering with the integrity of the SWIFT data. And here we can use softwares, we can harness skilled labor or compliance skills to detect these anomalies within the payments. Now, how to connect the dots and mitigate this risk? I guess it's good always to make the remedy through the integrity triangle, which is the opposite of the fraud triangle. So you have On the fraud triangle, you have the opportunity, the rationalization, and the pressure, versus the integrity triangle, where you have accountability, integrity, and a fair pay system, which will raise and boost a culture that fosters transparency, fosters reporting, fosters a management information system where all stakeholders within the company will shoulder the compliance and anti-fraud risk, and this will not be left only to the compliance team or the third line of defense. So you have the senior management enrollment, and also here we will get rid of what we call the dual brain syndrome, like the business people arguing to get more business and the compliance people fighting for better, robust controls. You will get the two on the same page, steering the organization toward profitability, but in a good, ethical, compliant way, let's say.
Thank you. Thank you, Mr. Shawki. So, I liked what you talked about this, the fraud that happened, swift fraud that happened with the Bangladesh bank, where the vulnerabilities of the system was the back office where actually the fraud took place, right? And you really emphasized on that. And so, how do you connect the dot? And you talked about the integrity triangle as opposed to the fraud triangle. Integrity, accountability, and availability, I think. So you made a very good point about how to connect the dots. Thank you, Mr. Shawki. Very new insights. Mr. Ibrahim, would you like to talk about how to connect the dots, handle compliance, reputational, and operational risks?
Yeah, connecting the dots will require also maybe a deployment of a system-wide enterprise risk management for an organization that has an enterprise risk management capability or that has deployed it. Will be able to see at glance the extent of the company's vulnerability to these varying types of risk. Now, for compliance risk, and as you may know, one of the ways to streamline this with operational risk and reputational risk, as cited, is for the company or the establishment to build a culture and operationalize compliance into their day-to-day activities. In operationalizing compliance, you want to ask critical questions of what are the heads of legal obligations, what are the social expectations with respect to the company, and building that into day-to-day operational processes and getting employees and stakeholders to understand the commitment of the company or establishment to doing the right thing and the impact that may have on the reputation of the company. So from compliance, non-compliance, you can have reputational damage. The overall business objective of the company can be impacted negatively. So in order to help employees and stakeholders appreciate the extent to which the company may suffer these losses in this area, may be exposed to this risk, is to internalize and operationalize statutory compliance obligation, right, as part of day-to-day business processes. Now, training of employees and retraining has been found to be very useful in disseminating information on compliance risks and reputational risk. For instance, when you train employees or you give employees targets to go and achieve certain objectives, you get the employee to understand that as much as achieving the business end is important, the manner in which the objective is achieved is equally important. So you don't achieve maybe having the large market share at the expense of bribery, of engaging in corrupt acts. or you don't falsify information in order to give your organization a competitive advantage and above other competitors in the industry. So for me, once we're able to define what our statutory legal obligations are, what are the code of conduct, um, business ethics and practices of the company, and it's internalized through its various departments, and with reinforced training of employees, the exposure to reputational risk will be minimized, much so not being in conflict with any law that governs business operations generally. So, where an organization is sanctioned for compliance violation to the tune of billions of dollars, the, perhaps the organization will go under, because after paying some of those fines, the business may not be able to continue as a going concern, and that invariably shut down the establishment um, generally. So I think for me, the lines are clear. It's just an integrated approach, and like I said, enterprise risk management framework in place will help you to see the interconnectivity of this, not meeting one and endangering the establishment, not ranking one risk above others to the extent that some of the basic obligation and steps that should be taken with respect to avoiding compliance risk are not compromised at the expense of the need to optimize or sustain operation of an establishment. Thank you.
Thank you. Thank you, Mr. Ibrahim. I like the approach you took about enterprise risk management. Now, enterprise risk management, if you know, money laundering is a part of operational risk. That was the earlier approach. Today, it seems money laundering is the dog that wags all other tail, is the tail that wags all other all the other dogs. For example, all the risks, and you were right about this, all the risks are connected. So you need to have a culture of compliance. I mean, that is what I gathered from what you said. Build a culture of compliance, and you will take care of all the other risks. Train your employees, right, Mr. Ibrahim?
Very right, yes.
Right. Okay.
Just let
Thank
me
you.
add one thing. Just let me add one thing that reinforces what you have said. A think risk environment.
Yes, yes. A risk culture.
Yeah. Thank you.
Right, thank you. Mr. Basem, how do you connect the dots? Handle compliance, reputational, and operational risks?
Yeah, as my colleagues mentioned, the most important thing from my practical viewpoint to have all these risks under one umbrella. So if you have all the related risks for compliance, reputational, operational, and many other business or non-business risks within one umbrella, within one department, within one responsible, it will be more easy for the company or the organization to link and fill these dots. Another dimension important also is the system or platform, that if we have all the risks or indicators within one platform, we will be able to see the consequences and the results of such risks. For example, sometimes you will find very important information within the compliance department, and the risk management don't know about such important information. So if we have all together in one umbrella, the whole company will be able to utilize such information. So we should have united department which has all the risks together. We should have also system or platform which gather all the related information under one umbrella, so anyone can link the dots between each department and each risk within the organization. Thank you.
Thank you, Mr. Basem. You make a very interesting point, Mr. Basem. The trend today is about convergence. Convergence for all the financial crimes. For example, if you have a financial fraud team, they look at the predicate crime, how the crime was conducted, whereas the AML team will look at the, the concealment of the funds. So how to bring them together, to get them to converge, have a financial crime compliance team, and that's one. But you made another point that all of them should be part of an integrated enterprise risk management. So everyone should be able to understand the red flag indicators, etc. Right, Mr. Basam?
Exactly, 100%.
Right. Thank you. Mr. Ajay, how do you connect the dots?
Thank you. Non-financial risk management is essentially becoming very, very important, almost in line with financial risk management. As we have seen, especially for banks, trust is a very important factor. We have seen recently in US, in case of some of the banks, where the trust for investors of those banks have eroded very quickly in a span of very short time, and then depositors had made a run on those banks. So in this new age, trust for banks is very essential. Compliance function is essential to keep the trust factor when you see from a depositor's or a consumer's point of view to be kept intact. How do we achieve this? I think strong risk management in coordination with the compliance function. These days, compliance function has a very large role in terms of not only combating AML related issues, but also in terms of various other compliances related to various regulations that banks have to deal with. Excuse me. And considering the risk appetite of the organization. The risk appetite, once set by the board, will be followed by risk teams and compliance to come with a plan as to how we will be attacking or sharing the required information with consumers and how to deal with various threat actors. Right. Central banks also have taken cognizance of this. If you look at the various technologies now related to ICAP and stress testing, central banks have taken a view that you need to consider non-financial risk factors also with equal importance as financial factors when considering stress factors on capital and ICAP. Another way how banks deal with these is to have a conducive risk and control assessment framework. You map the risks, challenges that you have, and the mitigation factors in coordination with compliance. So this tool helps, especially financial institutions, to deal with various challenges that we face in this era, to deal with various threat actors, to be afloat in terms of this technology-driven age where word of mouth can spread very fast and trust on banks can erode quite quickly. Thank you.
Thank you. Thank you, Mr. Ajay. So what you mentioned is capital adequacy norms. Tier 1 is about capital adequacy, but you focused more on Tier 2, that is ICAP, where the bank itself assesses its risk management systems, its capital adequacy, etc. And of course, there is that third one is about disclosures, doing good disclosures. Thank you, Mr. Ajay. Now we go to the next one, the next question. How do you create the trust factor amongst your customers and the regulatory authorities? Mr. Shawki, would you like to give your insights onto that? How to create the trust factor?
Yeah, definitely. Just before this, the gentleman and the colleagues on the panel has just mentioned an important point regarding the connecting of the dots is that the organization should not work in silos. So we cannot have the anti-fraud department or the compliance department operating in a data set of its own and the business line operating on their own. We need to have this collective sharing of information, especially when it comes to financial leads. So the siloed mentality can bring in a very serious threat to the organization. Now, regarding building or cultivating the trust vis-a-vis the clients or vis-a-vis the regulator, I guess first and foremost is data quality, transparency with the regulator, promptness with the regulator. You have always to be at the forefront in replying to investigative inquiries, to building your database of local lists in a very enhanced way. Also, as MLRO, I have learned that STR filing is critical in maintaining this good relationship with the regulator by filing what we call quality STR versus defensive STR, which help in feeding the database or the national database to prosecute the criminals and preempt them before they do more harm to the society. Also, standard setters, international regulators always call for voluntary disclosure. Even if you come across a violation or a breach that has happened in the past, try to bring it up to the regulator in a transparent way, because this will help you and help the organization avoid hefty penalties later on. So this also boils down to transparency. Regarding the customers, be professional with your customers, apply the suitability principle, i.e., don't focus on achieving your target sales. Try to sell what is convenient to your client, and this needs or should make the staff educated, aware of what product design they should offer the customer, because every customer is in need of a very specific customized banking product. So all of these will land you in a safe area whereby you cater for your customer in a compliant way, and you gain the respect with the regulator, so you don't get penalized or revoked license as you go.
Right. Thank you. Thank you, Mr. Shawki. Mr. Ibrahim, would you like to talk about how to build the trust factor?
Yeah, very well. I want to start, and I'm taking the lead from what Mr. Shawki had said. Disclosure. Disclosure is very key. Timely reporting, like voluntary disclosure and reporting of infractions within your system. You don't allow the victim or the customer who has suffered from system dysfunctionality or fraud within your system to be the one to cry out. You can actually put that complaint, lay that complaint to the regulators and appropriate body, and make those early disclosures on time. Also, I think is the manner in which we implement some of the regulatory requirements of filings. Timely filing and neat filings also create an impression, and in the manner we execute this. It's also required that we cooperate with the law enforcement or relevant agencies when it comes to investigation. You don't conceal facts, you don't conceal evidence that will be useful, and you cooperate with them when need be. And if they see that you have a very open disposition to working with the regulators, the regulator also will be a bit softer towards you in the event of an infraction. So for the regulators also, you can have partnership or alliance with the regulator. We've seen instances where organizations write to regulators for advisory on certain matters or areas of ambiguity as to how to comply with certain provisions of the laws and the regulation. And they wait to hear and receive direction from the regulator. So if you embrace the regulator with an open arm and you do what is needful and what is required as by the provisions of the law and regulation, I think that will earn you some level of respect before the regulators. Now, for the customers, I think it's about duty of care. How much you care for your customers. If customers are aware that you have a very um, rigid process of vetting, you pay attention to details, your process, you check and ensure that the uh, customers have the right capacity to engage with your organization, and you put modalities in place that inspires confidence. So if we have a strong due diligence process and you conduct enhanced due diligence on the customer, and the customer is aware of your due diligence process, the truth is, yes, at the initial stage, it may look as if it's time consuming to the customer, but eventually the customer will learn to trust your processes and validate, whatever action that you take. Yes, you can earn trust also of customers by advertising openly uh, what you do with respect to compliance with regulations, and how you take the safety and the protection of your customers as part of your business concern. So through open declaration of statement and you know customers engagement and making it the front burner issue whenever you have the interaction and occasion to deal with your customers, it will go a long way to improve the trust. Then timely resolution of complaint, and getting the customer to know why you do what you do. People don't really appreciate, and they don't know why you do KYC, for instance. People don't know the depth and how it helped the system. You understand? And I think where we're able to explain some of the things we do and why we do and how they're beneficial to the customers, and we demonstrate in action that we are really following these procedures, that will go a long way in inspiring uh, customers' confidence and perhaps satisfaction in the long run. Thank you.
Thank you. You make some very good points. The purpose of KYC must be explained to customers. Very good. So, Mr. Basem, would you like to connect the dots? How do you build the trust factor? Sorry.
Yeah,
How
the
do you
trust.
build?
In summary, we need to be very proactive with the regulators. So we can approach the regulators, not with them until they publish or they create new rules or update their policies or procedures or sanctions. It is good that the company or organization approach the authorities, participate in the reviewing the drafts that they are issuing for public screening, and it is good to be in link and direct communication with the regulators to show them that you are very proactive and you are helping the community and the government in such role. Also, many government and the regulators are giving some kind of certifications for the companies which are taking proactive role and being committed not to the basic or minimum level, but they are taking the highest level of compliance. So this another thing. The third thing, to be very transparent and responsive to the queries and concerns from the investors. One practice is the whistleblowing policy. It is great that the organization has whistleblowing policy in place and ensure that we have such policy active and transparent with the client. And at the end, the tune at the top, Pijush, tune at the top. If the board and the top management practice such transparency and the trust in dealing with such cases, it will be cascaded within all the organization. This in summary. Thank you.
Thank you. Thank you, Mr. Basem. Mr. Ajay, would you like to see how to build the trust factor with regulators, with customers?
Sure. As my esteemed panelists mentioned, timely disclosures is the first step and the most important step. We need to be proactive. We need not be restrictive with the essential disclosures. We need to be forthcoming with additional disclosures so that the stakeholders, along with the regulators, have a view of how we face various threats and how we are dealing with these threats from a risk management perspective. It's interesting that in Kuwait, there is a law which requires the chairman to read out all regulatory violations at the shareholders meeting itself. So this is the type of disclosure we have seen in some of the jurisdictions where the regulator is very strict in terms of letting shareholders and other stakeholders know in public that what the organization has dealt with during the last 1 year. Again, trust factor for banks is very essential. A run on banks can happen in a very short time, as we have seen in first quarter of this year. Resolution of customer complaints is another issue. For banks, most of these customer complaints are also mirrored at the portal with the central bank. So resolution of these to the satisfaction of both the regulator and customers is very important for banks. One factor that we have seen is that regulators often lag in terms of adopting or adapting to various technological challenges. Right now, we have various cryptocurrencies in vogue. However, there are very few regulators who have the framework to deal with such kinds of advanced technology offerings for various customers. So we also hear about a lot of frauds happening in this sphere. Unfortunately, there are very few regulators who can deal with this, or whether the regulatory framework is available for institutions to deal with this high-paced technology changes. Some of the regulators have taken up a sandbox approach where we, banks and other fintech participants, are also allowed to come to the central bank and participate in this framework wherein all of us share the results of these in a safer environment rather than offering to the customers directly. Thank you so much.
Thank you. Thank you, Mr. Ajay Thomas. Gentlemen, we have run out of time now, so we will be ending the discussion right now. However, I'd like to make 2 points, which Mr. Basem mentioned. You know, the most important thing is the control environment, the tone at the top. You know, that can make a big difference in the trust factor with regulators and with customers, the tone at the top. What the top management talks to, the control environment. I have dealt with SOX compliance, and you know, the entity level controls are the most important. The last question I want to say, why do customers give loans to banks? You know, we all know that banks give loans to customers, but all customers give loans to banks. Your deposits are loans that you make to the banks. You give loans to the banks because you trust the banks. Without trust, the banking would be dead. Thank you, ladies and gentlemen. We end this session, and such brilliant insights from Mr. Shawki, Mr. Ibrahim, Mr. Basem, Mr. Ajay. I think this panel has really shown the very important regulatory concerns, and I thank all of you. Thank you, ladies and gentlemen. Thank you.
Thank you so much.
Thank you very much. Thank you. Thank you.
Thank you. So, Mr. Anil, what next?
We cannot hear you, Anil.
Anil? Okay, gentlemen, I think we can exit this session, and I want to thank you again, right? Mr. Anil?
Okay, hear me now?
Yes.
Yeah, we can hear you now. Yeah.
Okay, fantastic. So, Mr. Pijush, I really like the way you summed it up. About the customers giving loans to the bank concept. It's something that all of us need to understand at a very basic level. Right. So, I'd like to extend my thanks to the other panelists, Mr. Ibrahim, Mr. Basem, Mr. Ajay, and Mr. Shawki as well, for taking all of your time out of your busy schedule to be a part of this particular discussion. Right. We would definitely coming up with future initiatives on several aspects of AML or CFT or any other financial frauds. I would definitely personally reach out to you to seek inputs from your end. Right. For now, thank you so much for joining in, and you have a nice day.